All right. Good morning, people. Late start today. Probably will get interrupted here in a few minutes too. Working with my son this morning, so it's a beautiful cause. But yeah, I'm running a little behind today. It's all good. Um, yeah. What do we have for? So we got a market that opened Nasdaq up 0.1%. It's like we held up okay yesterday. The Nasdaq just kind of hanging out. We did end up with a possible distribution day. We can take a look at that and see if we did have a distribution day. That's not my screen I wanted. I don't have my chat window open either. Looks like Fortinet doing pretty good here. Not sure if it's going to attempt a breakout today. Not a lot of volume on the open. We'll see if it'll come in later. Hey, what's up, Rob? What's up, Ted? INSG some big issues. Did it undercut? Hasn't undercut yet. We'll see if it does. I don't like the fact it's remained down here. I thought yesterday hopefully we would have bounced out, but it reversed almost immediately and hasn't really come back since. So I think 44.6 is your exit point, maybe a little bit under that. But yep, all right, let it do what it do. Fortinet's working pretty good though. There's your breakout point for this cup and handle pattern. It's coming up to it. I already noted we don't have exemplary volume today, but it's kind of running nonetheless. And we'll see how that one works out. A lot of green on my screen this morning. EDU, GMed, Boot, Match. There's Twilio, ESNT, AMRN. Most everything's pretty good. Looks like Boot just hasn't stopped selling off. It's already filled the gap. Let's see if it'll bounce out of that. O'Reilly still into new highs almost every day here. Holly's got a spike. Let's go check it out. Oh. I think this is the one we talked about yesterday. This is an analyst downgrade, if I'm remembering correct. Yeah, it looks like this was an analyst downgrade. I was kind of jokingly saying buy it yesterday, but an analyst downgrade generally won't cause that kind of a crazy reaction. I don't really catch these falling knives, not my particular style, and I don't believe analysts as it is, which is kind of why I said buy it jokingly. But it looks like it would have worked out pretty well. You'd be up about 3%. Yeah, I think if you do, you have to give the bottom of the spike as kind of your stopping point, if you will. Oh, new shares? Did I miss that? That may have been a previous, maybe that was a previous news. I don't know. Everything yesterday was regarding the downgrade, I thought. Morgan Stanley downgrades Holosys Automation. Holosys Automation shares slide. Maybe that'll say something else. I hate that dark blue. You can't see it against the black. 25% following 7.8 million common share. The stock was downgraded. Oh, so it was downgraded by JP Morgan based off of the back of that 7.8 million offering. Okay. Yeah, I don't know. I would well, first of all, I wasn't really interested in the stock to begin with in terms of trading it, so I probably would just avoid it altogether. See, when you're investing, you typically have something that you do well, and you just want to do that one thing. You want to avoid everything else. There's opportunities in each one of these stocks almost every day, And so you want to avoid all of that and pretty much just deal with what you're good at. All right, Fortinet looks like crossing that trend line. Good volume coming into the stock. Maybe this will change things. Again, if this is a breakout day, you're looking for 40% above average volume. Average volume being 1.73 million shares, 1.74 million shares, 174 times 1.4. Look for 2.43 million shares on the day today for a breakout. So currently with 2:30, and we're about 15 minutes into the session. Not quite sure if that's breakout volume. We'll need to maintain this elevated volume level for a little bit to, well, maybe most of the day in order to get that going. But Fortinet is a 99, is ranked 99 on the IBD list in terms of their composite rating, and they are in a top industry group. So I don't think you can discount them. Give them the benefit of the doubt. That's a dope table. I'm looking at I was going to write something down. Apparently I grabbed an old book of mine. I can't write stock notes in this one. I was cleaning my office yesterday, so I have papers everywhere. I don't know what's what. I think this is an old notepad too. Yes it is, but it's empty, so I can use it. Okay. I know you care deeply about that topic. Okay, so what I was going to write down is the stock market's open for 6.5 hours, which equals 13 30-minute sessions in a day, or 26 15-minute sessions in a day. So let's just take 26 since we're 15 minutes into this day. Let's extrapolate that. Let's just call it 380 times 26. Gives us 9.8 million shares, which is well above what we need, which was what, like 2.4 million shares or something like that. Yeah, we need 2.4. So the average so far is well over 2.4. So there's a possibility we could get that kind of a day today. Now the general rule is that volume declines throughout the day. It expands in the open, it expands in the close. The rest of the day it declines into almost like a cup. So the fact that we're 8 or 4 times above what should be our average volume gives us a little bit of solace that we could end up with a breakout day today. So let's say we did that calculation and we're looking for 2.4 and we got 2.6. You would argue that this volume is not sustainable throughout the full 6.5 hour day. Therefore, we're probably unlikely to get that. But that's kind of a way to judge that. Any company added new share offering, is that typically a hunt for more money, or is it a sign of tough times for them? So, companies ask for money for different reasons. The best secondary offerings are with a growth stock similar to Tesla. I'm not sure why that one popped in my head, but that's a very high growth stock, and they need money to fund operations and or new expansion. That would be a bullish scenario for a secondary offering, or even putting stock that they hold on the open market. Most everything else is, I don't know all the scenarios that how Wall Street categorizes secondary offerings, but most scenarios are seen as negative, because the whole point of being in the stock market and public companies is shareholder value. So when you dilute shares, it dilutes shareholder value. So it is typically seen as a negative. All right, Fortinet right now, fairly handily over the trend line. We paused a little bit here. We'll see what happens. We got NASDAQ up 0.21%. Let's go take a look at our actionable list, or our big list here. Wow, actually not too much up here. Not too much up here. Fortinet 2.2. AEYE getting on with that program. Oh, yesterday ended up selling off. Bouncing back today pretty good. Have that trend line coming up. We've got Riot off of Bitcoin's little pop yesterday. Minor pop, but a little pop. Save Spirit Airlines coming up. What's up, Eli? Fortinet, MDB, Spirit Airlines again here. It keeps jumping up, so I keep going over the same stocks over and over again. Silica still stuck in that frozen rope. We've been discussing this the past, I don't know, few days. Frozen rope pattern. Looks like it's getting on with it right there. Could be pretty good. All right. Got to go read that article in stocks. We'll do. DocuSign may or may... Oh, that's a pretty interesting day yesterday. What happened yesterday? Let's go look at that whipsaw. Whipsaw. That's a bullish candle. Bullish. Neutral, bullish. So it looks like did have some decent volume coming in yesterday. Today it looks like it's getting on with that bullish volume. We'll see if it'll pull back in or not. And not a tremendous amount of volume. You can do that same exercise mentally. So you can do, well, now we're 5 minutes. So if you want to break it down by 5 minutes, we've got, what's 2678, 5-minute sessions. So we're 4 into that. Anyway, I don't want to do that math, but you can if you want to. On this particular one here on DocuSign. But DocuSign trying to come up after a pullback. Looks like it pulled all the way back down to the 200 period moving average. And is trying to get back above the 50-day today, which could be a good sign. Volume's okay. It's not spectacular. All right, Funko. Let's, you know what? Let's just do this. Still, my time axis is off. All right, so Funko, not doing too bad. Not doing too horrible either. Absolutely, the stock may or may not rally. Absolutely. That's my welcome to my new website. Musings of a stock guy. That's bad. Bad joke. Bad joke alert by Real Crypto. All right, AMRN still maintaining above this trend line, which is good. Which is pretty good. And then if it can pop out of this at some point, may consider taking a position on that pop out. Again, still trying to work out. Maybe moon. Yeah, well, it'll just be a list of everything that could moon, and it would just be everything. Bitcoin could moon. XRP could moon. Or how about whenmoon.com, and it's just a big middle finger in the screen. Stop asking that. Couldn't find my website the other day. I did notice I got a 500 error on my website yesterday when I went to go log in. And then it came back like a minute later, so I don't know. It's working right now. I just typed it in. It's up, so yeah, if you need any links or anything, just shoot me a message there in Slack, Rob, and I'll if I'm available, I'll answer. Sometimes I'm not quite there or out and about with the kids or something. But yeah, hit me up. Yeah, Fortinet is moving this morning. We actually started talking about that. Did our little volume calculation throughout the day. So we could end up with a breakout day today. Looks like it could be that breakout day. You know, we're above the trend line, and let's see if we can maintain above the trend line. So you're within buy territory 5% out of that $88 $88.50 level, give or take. Right now we're within 1% of that. So we're buyable until we're 5% plus out. So we'll see how that goes throughout the day. Nasdaq doing pretty good today. I was gonna check earlier if we were in a distribution day yesterday, so let's go look at that. Looks like Twilio's up 1% today. Oh, now we're gonna tariff the EU. Man, he just loves tariffs. Yeah, so it looks like we did pick up one distribution day yesterday. Yeah, so our current distribution day count is 4 on the Nasdaq, 5 on the S&P. We did have some distribution days fall off due to time expiration, so our distribution day is nominal at this stage of the game. All right, AEYE, TTD on our actionable list. Acacia, looks like it's still holding up really well. We talked yesterday about how these distribution, these little selling days here are very muted in terms of volume, and there could be a little tiny trend line here on my 5-minute chart. Maybe if we can get over that, that'll reverse our fortune here in Acacia, and then that could be an entrance for at least a run up here to recent highs, which isn't too far away, but it's something. So let's say we break here at 58.70. That could make it a run up to 60, which is a decent little trade, I guess. And then even beyond that, if you want to hold on to it. NVIDIA looks like it's holding pretty tight after yesterday. Looked like a pretty scary day on the 5-minute. On the daily, doesn't look scary at all, being held up by the 10-day moving average. AMRN already kind of coming back. Workday. Chesapeake looks like it's found a little bottom here yesterday after a quick 2-day run up inside of this channel, whatever you want to call it. Some lines I drew. Workday holding very steady up here. 1, 2, 3. Looks like working on a flat base. Your breakout point is $200.10. Is your traditional breakout point for Workday. Although probably would be considered a base on base pattern, and breakout point would still remain the same though. Chesapeake, Twilio. So Twilio still hasn't broken down below the 50-day, but we haven't moved back up through it. So we're still above the 50-day. Break below the 50-day on volume is a very clear exit signal of pretty much any position that you have. So speaking of which, I should probably. I still have my. I did enter a position on Twilio yesterday on a bounce above the 200 or the 50-day. So, I thought I alerted there. There we go. At or below. Aha. Okay, so if that alerts, I'll have to exit that other position that I went into yesterday. All right, Chesapeake, boot. Yeah, selling off. INSG, still hanging out around these lows. Still are kind of in a lower risk entry point. You've got, 2.5%. You can give this a 2.75 to 3% stop loss, and just be perfectly comfortable with that in terms of this INSG. I'm still not mad at that trade. That's not bad at all. Still don't quite exactly know how they fit into the 5G spectrum, but they do 5G stuff. Take-Two Interactive still above that longer-term trend line. Boot, O'Reilly making new highs, which is the norm. Skyworks Communications looks like it's trying to edge its way a little bit higher. CGC kind of stabilizing. Fox going sideways here the past couple of days. You can see there's just kind of a mini consolidation. It's formed much tighter than this, and that's pretty enticing right there. 75 appears to be your resistance level right now, so they're getting it between 74 and 75. So a break above 75 on some good volume could put this into maybe even breakout territory here above this 76.7 or 87 level. Yeah, 76.87 would be your technical buy point on a breakout there. VFF getting hammered. Not really hammered, but it's down the most on my screen there. Edu, GMed, Match.com. Holding okay. All right, so market not doing too bad. AEYE, a big winner here. Very microcap stock. Very, very microcap stock. This comes from one of our watchers that his boss told him to buy it. And apparently he has some decent stock picks. So we'll see if that'll get going or not, but it's leading our list here. And I think we noted a possible ascending. No, that was INSG. INSG has the ascending base, potentially. Right there. So where's my, there we go. So this INSG providing us with 2-3 days here potentially of entries, with a pretty good stop there at 4.6, a little bit under that. Oh, Eli quick with the puns today. I like it. Very nice. All right, let's kind of, I think I had a, I did not have an INSG trade lined up. I like the fact that it's still down here, and I think I want to buy it. That's not too bad. I could go for a longer term, but it only goes out till September. I don't want to pay that much for September. Okay, I'll have to do May, I guess. How long in being in the market would you recommend someone look into options? Done. Done? It actually took you a long time. I thought you were already. You're not even close to done. Yeah. And this is not right. You misunderstood what we were doing here. Hold on a second, guys. All right, I'm back. So Eli got back with probably a good answer. Um, so institutions. So if you're an institution, they actually, they're from my knowledge, and this could be completely wrong. I didn't do a study on this. Um, they sell options. When you consider 80% of the options expire worthless, if you were to do the math on that, and I'm sure they've done, they basically become market makers in the options market. And when you do that, you're able to take advantage of that fact that 80% of them expire worthless. So it's a money making proposition. Um, one of the difference between retail investors and institutional investors is the retail investor generally has a portion of themselves and their account basically gambling at any given moment in time, where institutions have a very, very clear plan on how they want to execute and and do those trades. They have usually a very, very clear plan, or they, Ethan, stop. Or they just employ really good traders that have a big history of performing exceptionally well. Twilio. Oh, that was earlier. Sorry, I looked at my phone. So anyway, yeah, I like Eli's answer. It's not necessarily a number of time. Options. The problem with options. Ethan, can you close my door, please? And don't wake anybody up. Hey, hold on. Okay, so in order to trade options successfully, number one, you have to know why you're trading them. And that has to be a pretty good reason. Number two, you have to have a distinct, it's basically called a distinct edge on the market. You have to be able to quantifiably say what that is. There's a time component that you have to get correct. Otherwise, the options just literally erode away. And then you have to there's another component, which is you can't pay too much for the option. It has to be profitable, so you can't pay too much. And what I mean by that is that if you go into an option that has like a really wide spread and Fortinet coming back down into the base, if you've got a pretty wide spread on your options, and then you're probably going to end up paying too much, and that's going to lead to that option not being profitable. Yeah, so far not happy with that particular breakout. Fortinet. Abandon the ideas of the trading courses? Yeah, I guess I did. I guess I did kind of end up doing that. Yeah, I don't know. I may jump back on the trading courses at some point, but right now my focus is pretty much elsewhere, to be honest with you. Yeah, I spent like 3 months toiling with building courses, and I built them, and uh, they weren't in a good format. The information in them, I liked it, but the format wasn't very good, and Ted's seen them. Ted was asking about courses for a while, so I gave him access to the course. I think even he stopped looking at them. they were just they were just hard to go through, and it was a lot of work, and I kind of got disheartened by that. I'm not a I'm not a writer. I'm not a that's not my forte. So I got a little bit disappointed with how I did that, and I didn't want to I put them in text format, and I guess everybody wants video these days. I guess I knew that. I should have done better. Should have done videos, but editing videos takes a long ass time. MJ, how you doing, Mr. MJ? Finding a little bit of support here. Maybe we'll end up rounding back up. Hard to say. Let's look at the normal MJ name, CGC. We already looked at this one. Looks like it may have found a little bit of a bottom. Cron. We'll see if it's done going down. It did break that trend line and pretty much fell apart at that stage. Yes. I see. Very nice. You gonna get on with that work, Bugs? Oh, very good. Remember, addition. You're adding. Okay. AMRN. All right. Looks like it's kind of breaking a little trend line here. This one could get going. So do it. All right, so kind of a little bit of a lazy day. We know that Docu earlier was rocking, and it's still rocking, actually moving up a little bit more. GHDX getting some support here at the 200-day moving average. And with a potential trend line break here, although I don't know much about this one, we can look it up. We can change that really quickly. It's a pretty clear trend, a nice little choppy reversal right there. Potentially some good green pops. Probably even became pocket pivots after this one, maybe. So maybe a couple pocket pivots and maybe a reversal. All right, so Genomic Health, 86 composite rating, 93 relative strength rating, which is pretty good. Develops genetic-based clinical diagnostic tests for cancer that allow individual treatment decisions. 300% EPS change last quarter. Looks like that's kind of a bellwether quarter. Most everything is kind of the earnings department's kind of flat. Oh, there you go, Rob. Yeah, it's a pretty tight stop loss. I'm not mad at that trade at all. I was kind of lining it up myself there, and then I get distracted with other stocks. Just make a note to revisit INSG. AMRN up 2.7% on my watch list there. Sales only 20%. Up down volume 0.9% change in funds owning stock 1, quarters of increasing fund ownership 5. So it's pretty good. 1, 2, 3, 4, 5, 6, 7, 8 red dots, which is technically not good. Yep, AMRN right there. Yep, still getting on with that program. Looking okay. I did want to look at that GHDX potential trade, though. That's come down quite a distance, and it could potentially rise, back up to about that level, maybe. Not too bad. That INSG trade's looking pretty good. Little mini bull flag here. It could be good.
Oh, that's pretty easy. This is easy.
Make sure you're adding. It should be pretty simple. I just think you have to fully understand what's going on. Those options are cheap. You got to buy a lot of them.
Is this correct?
Well, so here's the thing. I'll show you.
Is this correct on the first row?
Is it? Are you adding?
Mm-hmm.
Well, what's 9 plus 2? Oh, that's 9 plus 1. You're correct. Okay. Yeah. It looks like you're adding correctly. Just keep going.
I'm having a war.
With what?
Numbers.
Ooh, a war with numbers? Well, the numbers will always win. So I'll show you what I ended up with. And I was actually thinking about this like a week or two ago as I started doing these courses like last March. And I never... So this is for crypto. This isn't for trading. But what I ended up with is different types of things here. And we can just go into volume analysis. Some of these are more done than others. It's just a lot of text, and it was pretty verbose. Like I haven't finished some of these. Capitulation, use volume first, coin float and liquidity, short-term time frames. Where does the volume come in? Add it all up. Price is going, but volume is going down. When low volume is healthy, price is going down, and so is volume. So I was just kind of going up different scenarios, maybe that people could, because I get asked these questions all the time, and they're usually pretty specific. Charting 202. This one I didn't even get to this one yet. This was going to be psychology and charts, herd psychology, and cryptos versus stocks, trading for a living. Like money management, I think is almost done, or was done. But then you go into an individual course, and I pretty much had like a big text blurb like that. Is kind of what I ended up with. Ethan, making a little too much noise, Bugs. But anyway, I didn't get really good feedback on that. I got pretty tepid feedback, and there was like 220 individual lessons like this that really ended up I redoing 220 lessons or reforming. That would have taken me another another 6 months, and so I just got pretty disheartened with the courses. Yeah, it sucks. I know a lot of people wanted them. I don't know. Like I said, that's not my forte. I don't write textbooks. I was basically writing a textbook. I was trying to make it a textbook at least. Kind of like how I generally do is, I don't really teach one particular style of trading, although I obviously emphasize on my own, but I try to give people general information and so they can be better. I'll give specific advice when asked, but anyway, generally pretty sideways there. But INSG not going any lower here, looking pretty decent. You know what? I probably should make Node Investor do it. Nah, he's got his own courses. You can go take Node Investor's courses. They're pretty good. I think he updated them a little while ago too. Nah, he's too busy doing his thing. He wouldn't be interested in that. We tried partnering up, and he just wouldn't. He wouldn't tell me. He wasn't thinking about it. He didn't talk very much, so he was just trying to, I don't know, listen or something. Tesla. Let's get back to normal topics of conversation. Not how businesses ruin relationships. I don't know. I think I'd let it go for right now. I mean, ideally we'd like this thing to bounce higher and not rest down here at the lows. So I think I'd rather, I think you got some good low Tesla. I don't know if you want to buy more down here. I would probably wait for it to go back up. I do like Tesla, but I was reading an article yesterday on the iPad. Regarding Tesla, and it's probably in another room somewhere, but oh, thank you, Ethan. Thank you. What it was saying is that there's some anyway, there's a pretty decent bankruptcy predictor, and Tesla's been under the threshold of that for the past several quarters. And it didn't look like it was one of those articles that was I hate Tesla article, because you do get those from time to time, and that's fine. Yeah, here it is. Yeah, let's see if I can find it. Actually, it'll probably be in my history. I thought it was an interesting article. It seemed to be a little more neutral than most of them. And I was looking at it kind of like, So here's the article. I'll post it here in chat. You guys can feel free to read it and make your own decisions. But towards the bottom of this article, they use this Altman Z-score. I haven't looked into this yet, but since you're talking about buying Tesla, so there's a safe zone, and there's a gray zone, there's a distress zone, and we've been in distress zone now for a couple of years, ever since. And he mentions ever since the Solar City acquisition, they've been in this distress zone. And so here they break it down by quarter. We were safe for a while, and then we go back into the distress zone. And he does a good example of explaining this Altman thing. And he plots it against different things. He's not necessarily trying to, I don't know if he's trying to prove a point or has an agenda. It doesn't seem like he has an agenda. But and then he tells you here about the Altman score. Yeah, I think I got most of the way down this article, but I agree with one point he makes in this article regarding Tesla. He talks about the company still wants to expand into Model Y territory. I think it's down underneath here. This one thing I actually did agree with pretty strongly, and he actually looks like did some math and some numbers. You can do your own math and numbers. Let's see Model Y. Here we go. So So here's a Tesla quote. Because of lower than expected delivery volumes and several pricing adjustments, this is from Tesla. We expect Q1 net income to be negatively impacted. Even so, we ended up the quarter with sufficient cash on hand. And then he asked, sufficient for what? After 2 quarters of positive earnings and cash flow, with the current quarter deliveries decline, anticipate Tesla will generate a positive cash flow from operations in Q1, but the investing and financing activities will erode this and quite possibly turn it negative. Given the $900 million debt repayment during this quarter, the drop in deliveries haven't come at a worse time for Tesla. They have some ambitious goals in the near term, namely the production facility near China to develop the Model Y for the market and to continue to develop the semi-truck and the Roadster 2. In my estimation, none of these can be self-funded from existing or continuing operations unless the company can deliver 90,000 vehicles each quarter for the next 2 years while managing its costs. And then he says a 90,000 delivery rate should provide 500 to 700 million in free cash per quarter, or 2 to 2.8 per annum. So this I thought was was one of my biggest takeaways, because I have thought about, why doesn't Tesla slow down in terms of their developing new products and just build cash for a little bit. And maybe it's just not in Elon Musk's nature to do that. Maybe he's a full-on steam ahead kind of guy, which so far in his life it seems that's worked. So maybe a situation where he doesn't feel the need to slow down. And look, in the end, maybe he doesn't need to, but he's going to try to build, do all these other. He's still doing big infrastructure things, and he's still kind of razor thin in terms of the margins of what he's able to do. And so I think that is a potential concern. I hadn't read too much about the slowdown, but that also could be a concern. Maybe he's kind of reached saturation point with people willing to buy the Tesla. And I mean, that could be a thing. I mean, that literally could be a thing. Is that maybe he's reached kind of peak growth? Because when you think about it, not everybody's going to want to spend $40,000, $50,000 on a Tesla. The Model 3 is still fairly expensive. I know they do have that $35,000 model, but that is coming at the expense of some margin, just so he can. He really shouldn't have made the $35,000 model yet. He should have waited a little bit longer, I think. But I mean, only Tesla knows their finances, and maybe they're looking 1 or 2 years out, and they're fine with that. So anyway, I thought that was interesting. But the Zaltman Z-score was something I hadn't heard of. But he mentions up here that it's a pretty good bankruptcy indicator. And Tesla's kind of riding that fine line right now between going into bankruptcy and not. And so you can see here, recently it's had an uptick the past couple of quarters. That's because they've been profitable. But they're going to end up riding that distress zone for a little bit, it looks like. 1.77. I think it looks like 2 is the distress zone, maybe a little bit less. I don't know. But they're going to be riding that distress zone line. And so anyway, I think in the end, I would probably rather. You probably may have your fill of Tesla down here, and then maybe just kind of wait and see what it does for a little bit, and maybe you'll kick yourself, maybe you won't, but yeah, that's kind of all I have to say about that. Well, no, it's not about. It's just about cash burn rate. That's all it's about. It's just about cash burn rate and stuff like that. So, all right, Fortinet coming back, which is good. Twilio bouncing a little bit here, kind of overtaken, double topping with yesterday. We'll see if we can maintain that. Where's INSG? Holding pretty good so far there. So anyway, I just wanted to share that article because I thought it had some interesting points and some decent numbers behind it. And it wasn't saying Tesla's going to fail. It was kind of saying, hey, here's these metrics I'm noticing, and this is what's going on. So always good to have a counter argument. And I do agree with the fact that they're going to be, they're still spending tremendous amounts of capital building another gigafactory when they haven't even finished their original gigafactory. It just seems like I know jumping ahead is good. I like it from an investment perspective, though. It just gives me a little bit of pause. I haven't told my wife to sell any of her Tesla yet or anything like that, so I'm not running for the hills. But Well, then I think you answered your own question, Eli. Buy some Tesla. Buy it. If you like it, buy it. If you like it that much, dump it all into Tesla. Take your Amazon, dump into Tesla, and wait for the next 10x in Tesla. Something like that. Anyway, I thought that was a decent article. Feel free to check it out. All right, guys, I think I'm going to bounce out of here with that. And yeah, market's doing okay here. We got a few healthy things going on. We got NASDAQ holding up pretty good. You want to buy it cheaper. Yeah, well, so that's the thing. I don't want it under 245. So I don't want it under 245. You could argue you're within the bottom 10% of a potential price range, or something like that. You're within 10% of this bottom, which I mean, hopefully never gets undercut. That's the hope, right? So within 10% of this bottom, I think you're pretty golden if you want to do something like that. So you're never going to get the bottom price, but you can get the bottom range. All right, guys, I'm going to get out of here. Have a good day. I'll see y'all tomorrow. Bye-bye.